Dear fellow trader, in this video I would like to talk about hindsight bias, event-driven trading, and election. As many of you know, Tesla went up 29%, and many people may say, "Oh, I knew that the stock was going to rise." But this is what is called hindsight bias in the realm of behavioral finance. As Warren Buffett said, in the business world, the rear view mirror is always clearer than the windshield. This is the simplified version of hindsight bias explanation. Let me break it down. The hindsight bias is the tendency to believe after an event has occurred that we knew it all along, overestimating our ability to predict an outcome after we already know what happened. Viewing past events as more predictable or obvious than they were at the time. However, this wasn't the case here. Now let's look at what we did for the election. As you may know, a few days before the election, I published a post with 15 strangle ideas, and I claimed this is going to be a better than betting on either Donald Trump or Kamala Harris. While the payoff for every 58 cents on Donald Trump was a dollar, and for every 42 cents that you bet on Kamala was $1, that outcome was not predictable by any means. And it was a total gamble. And the winner, Donald Trump, the payout was 66% for a 50-50 event. I don't like it. Why? Because what I offered provide 103%, and as you may know, strangles are buying the higher volatility regardless of the direction. In case Trump wasn't the winner and the market tanked, I think we had a very good chance of making good money on it, even better than this. Because usually panic create higher volatility in the market. There was another trade that I offered, which was a directional bet. It was AMD, and I offered to buy the call option of 146 at 99 cents. And as we know, the price went up all the way to $150.70, which was at the time creating 350% profit for those who opened this. However, this idea was only published for the paid patrons and platinum subscribers on the Patreon and platinum platforms. But I was thinking about if I could do better. I want to call this hindsight wisdom or learning from the experience. We have a strategy called event driven trading, which seeks to exploit price inefficiency that may occur before or after a corporate event, such as earning calls, bankruptcies, mergers, or a spin off. These events are predictable with unpredictable outcome. You never know if they are going up or down after these events. We have another kind of events which has the tendency to affect most of the market. They are unpredictable like pandemic or war, or they could be predictable like presidential election with unpredictable outcomes. If we are looking at the direction of the market, we should say they are unpredictable. However, if we are looking at the volatility, we can say all these events are unpredictable with predictable outcome. They cause higher volatility. So in case of something like this, we should ask ourselves a couple of questions. How big is the event? Will it affect the market? Can it cause panic or FOMO? What sector or tickers are affected the most in terms of wars? You see, like tickers, the defense sector or pandemic can cause huge volatility for vaccine company, and the presidential election caused very big volatility in Tesla and Bitcoin. What kind of volatility is going to happen in the market is very important. And if we see a transition from low to high, normal to high, or we are going to see an unusually high than expected volatility. Based on what I said, do you think Tesla's 15% move could be predictable? I say yes. How? If we are looking at Tesla previous movement, in 30% of the previous weeks, Tesla moved more than 15% during 1 week. Looking at this, you can see more than 15% moves based on the rate of change. If you are looking at the ATR, you see the highest ATR ever. However, if we index it for the percentage of ATR, you see it wasn't the highest. It was like the third highest ever. But don't forget, this election could lead to Trump losing the presidency, and Tesla could go all the way down like 26%. If you're looking at the more, we had more than 10 times Tesla tanked more than 15%. So we didn't know what is going to happen. But what we know was Elon went all in for Trump in this election, and either Trump winning or losing the election could have affected Tesla because of Elon's actions during the presidency. Having said that, if we had a strangle for more than 15% move, the strangle could be 207 and a half or 272 and a half because the price was somewhere around $250 at the beginning of the week. You can see such a strangle would cost you $150, but at the end of the week, that $150 could end up with $5,500, which is 35 times the premium you pay. The only reason that my system didn't detect it was an unusually high premium for put. If you are looking the 207 and a half puts were trading at 83 cents, which means people tend to pay 25% higher for the same amount of movement compared to the call option of 67 cents, which means most people expected that market go down after the election, at least Tesla going down. If you are looking at the put premiums before the election, it was unusually high, which for most tickers, and I checked the QQQ and the SPY, and I figured out that people tend to pay 30% higher for put options compared to the same call option with the same distance, which is very unique. I think this is very unusual. So many people bet on the market is going to tank. That is the part which was unpredictable. But if you were lucky enough to bet on the call options, you could make somewhere between 80 to 85 times the premium you paid. So having said that, the lesson for us is that instead of predicting the result of the election or bet on one side, we try to bet on both sides and win no matter what's going to happen. Keep in your mind, presidential elections are predictable event with predictable effect on volatility, which is higher volatility than what usually is expected. This can be the best time to trade these triangles, as I offered. Thank you so much for listening to me. I hope you enjoyed this kind of analysis and reviewing of what happened. I'm trying to prepare analysis about how Trump presidency can affect all the markets, and I will release it soon. Subscribe to my YouTube channel if you want to see that. Thank you so much.